This is the briefing for Monday, April 27th. First, I need to apologize. I had some technical difficulties with the briefing for Friday, and I didn't realize it until it was too late, but it didn't go out. But anyway, I'll kind of pick things up today. Here we are with the three indices that I cover. Spiders on a 60-minute basis, the Qs on a 60-minute, and the IWM representing the Russell 60-minute basis. Now, you can see we've got some extension up, as you can see in today's trading. So we had a little bit of volatility in the morning, but as the day progressed, that they were able to see some extension in the spiders anyway. Qs, really just kind of flat, just testing the highs of Friday. And of course, the IWM was flat, as you can see here as well. The real crux of the matter is not what's happening with price development, because we're at or just above new all-time highs. There's the volatility you can see based on the buying tails and selling tails that occur on each of the candles. But what's really a crux of the matter is what's happening with the market internals. Now you can see this is the spiders on a daily basis. You can see we got a slight new high above Friday's high. Look at volume in the spiders today. Now because I've got the crosshairs up here, you can look back down the crosshairs and see that today's volume low has not been seen going all the way back to the end of my chart, which goes all the way back to July of last year. So you can see we've not seen anything this low going all the way back to July of last year. 52-week highs minus 52-week lows are trending lower. We did have a little bit of a turn up on Thursday and Friday in market breadth on the NYSE, but it ticked down in today's trading, only 173 shares positive in the NYSE. And then in terms of the Qs, you can see the same thing, a little bit different in the Qs in terms of volume. We did have an extension up in Friday's trading and then testing the high of the day, or the high of Friday's high in today's trading. So you can see this is where volume was in today's trading. As you can see, we did get some periods of much lower volume. This happened to be Christmas Eve, and this happened to be Thanksgiving of last year. So you can see that we are basically in a holiday volume setting. Breadth in the NASDAQ is trending lower, net volume trending lower. And then, of course, in the Russell, you can see we're still in this area of consolidation for the past almost 2 weeks of trading, just above this 270 area. Volume ticked up slightly in the IWM, but you can see we're pretty close to all-time lows in volume, once again going back to December and Thanksgiving of last year, where the volumes were much even lower. Look at net volume, though, trending down as well. In terms of overbought and oversold, we're neutral. And this basically is a reflection that while price may be moving or grinding higher or in a rotational pattern, the market internals are really not strengthening to support that move, and it just gives me great concern when I see price development continuing to go higher and the market internals, especially volume, really not doing anything in terms of increasing to support the continuation of the rally. This is total volume in the NYSE. You can see this is a 10-day exponential moving average of total volume in the NYSE, and you can see the trend is down. This is net volume in the NYSE. You can see the trend is down in net volume, which is up volume minus down volume. Same thing with the NASDAQ volume. You can see the trend is down. It's been basically flat, but then the trend is down. And net volume, this is really kind of scary. This is net volume in the NASDAQ. And even in today's trading, as it tested Friday's high, negative net volume, which really is giving me a lot of heartburn in terms of whether this market has the ability or the internal strength to even hold up where it is right now. But the key is going to be the all-time highs. That's these levels right through here. That's 697 in the spiders. It is the 637 area in the Qs, and in the Russell it's the 270 area. Those are the key support areas. If those are broken, then we're potentially in an area of a pretty good counter trend rotation that because it's not being supported, the rally that we're in right now is not being supported by the market internals. So it's going to be very interesting going forward, especially watch what happens with volume, even on your individual stocks. The biggest concern I have is what's happening with right here, not just with volume, but with net volume also. So this is a breakdown of total volume. Now this happens to be volume in the spiders. This happens to be net volume in the NYSE, but looking at this chart, it tells a pretty sad picture. Total volume in the NYSE is down. Net volume is continuing to depreciate and decline. Same thing with the NASDAQ. Very interesting times. I'll pick this back up again tomorrow. Have a great night.